I was trading completely wrong until I discovered how smart money actually moves the market. I used to believe that price action was pure, that the market respected support and resistance, and that all I needed was the right indicator. I chased green candles, FOMO'd into breakouts, and panicked on red. Every time I thought I was right, I was wrong. And then I started asking myself, if 90% of traders lose money, who's making all that profit? That question changed everything. I started studying deeper, not strategies, but behavior, not just price, but intention behind price. And that's when I discovered the reality of smart money. The institutional players, the big banks, the hedge funds, the entities with billions under management. They don't just trade the market, they design it. So in this session, I want to break down exactly how smart money plays the game, and how you can flip your perspective to stop being the victim and start trading on their side. Let's begin with one truth. The market is not built to reward you. It is built to trap you. Smart money needs liquidity to enter and exit massive positions. And where is liquidity found? Around retail stop losses. So, what do? They create setups that force you to act emotionally. Let's walk through a typical smart money cycle. 1. Accumulation. Price moves sideways. Boring range. No volume. Most traders ignore it, but smart money is accumulating here, quietly, slowly, because they can't enter big positions in one shot. They buy into fear, into consolidation, while retail waits for confirmation. 2. Manipulation. They push price down suddenly, triggering stop losses. It looks like a breakdown. Retail sells, shorts enter, but it's a trap. Smart money is filling their final entries at a discount. They're using retail panic to fill orders. 3rd expansion, Josh, markup. Price reverses sharply, breaks resistance. Retail chases the move, but smart money is already in. And now they ride the trend while retail scrambles to catch up. 4. Distribution. Retail is now euphoric. Everyone is bullish. But smart money, they're offloading their bags. Price starts to stall, then the dump comes. Retail holds the bag. This cycle happens again and again, on all time frames. I used to get caught in it every week, but once you see it, you can't unsee it. Now let's talk about the weapons smart money uses. Stop hunts. They know where retail puts stops. So they spike price to that level, take liquidity, and reverse. Fake breakouts. Price breaks resistance. Everyone buys, then it dumps. It was a trap to engineer buying pressure for their sell orders. News manipulation. They enter before the news. When the news drops, retail reacts. Smart money exits. It's psychological warfare, because smart money doesn't trade charts. They trade human behavior. Let's take a break and zoom in on a mindset shift. I used to believe success in trading came from more screen time, better indicators, faster entries. Now I know it's the opposite. Success comes from thinking like smart money. Where would I place stops if I wanted liquidity? How can I trap the majority before the real move? Where is the fear? Where is the greed? Here's the formula that started to change my results. Observe where the masses are acting emotionally, and do the opposite. If the breakout looks too good to be true, it probably is. If everyone is screaming bullish, prepare for a dump. If there's a spike below support, it might be a stop hunt. Let's bring some numbers into this. Smart money doesn't aim to win 100% of trades. They aim to win big and lose small. A 30% win rate can make you profitable if your risk to reward is right. Let me run the math. You risk $100 per trade. Your target is $300. That's a 1 to 3 RR. 10 trades, 3 wins equals 907 losses equals 700. Net profit equals 200. That's with just 3 out of 10 wins, because the risk is asymmetric. Now combine this with a smart money mindset. Wait for liquidity grabs. Trade after the stop hunt. Don't chase, position. Here's a practical example. Price consolidates at a key level. Suddenly a massive wick breaks support. Everyone panics. Shorts enter. Then price reverses. Hard. That was your signal. The stop hunt just ended. The real move is beginning. That's where I enter. Not during panic, not during greed, but during manipulation. That's where smart money trades. Another thing that changed my game, trade journaling. I started recording not just the trade, but my emotions. Why did I enter? Where did I place my stop? What was I feeling before the trade? What did I learn after it? Patterns began to emerge, not just in the charts, but in myself. Trading is 80% psychology, 20% strategy. So, how do you start trading like smart money? Step 1. Zoom out. Stop chasing every candle. Look at the bigger picture. Where is the liquidity? Where are the obvious stop-loss zones? Step 2. Be patient. Smart money doesn't rush. They wait. Sometimes for days. If you can't wait for your setup, you're not trading. You're gambling. Step 3. Risk less, gain more. Never risk more than 1 to 2% of your capital. Aim for 1 to 3 or higher reward ratios. You don't need to win all the time. Just need to survive and let your edge play out. Step 4. Trade traps, not trends. Look for manipulation. Look for the trap. Then trade the reversal. Step 5. Think like a predator, not prey. Retail reacts. Smart money anticipates. You're not here to feel excited. You're here to think clearly. Let me leave you with this. If you're always entering when it feels safe, if you're always following the crowd, if you're always reacting to price instead of studying it, then you're being hunted. Smart money isn't smarter because they have better tools. They're smarter because they know how you think. But now you know how they think. Now you've seen behind the curtain. So next time price breaks a level, ask yourself, is this the move or the trap before the move? Because if you learn to wait, if you learn to think like them, if you learn to stop chasing and start anticipating, you won't just survive, you'll win. Not by being lucky, not by being fast, but by being aligned with the only players who consistently profit in this game. Trade smart, trade patient, trade like the money that moves the market.